Hello wonderful people of the internet, my name is Caroline Kihugu. Welcome back to my YouTube channel. In case you're new here, welcome, and if you're a returning subscriber, thank you my friend for always coming back. Today I would like to talk about the money market fund, and before we talk about the MMF, yesterday we talked about unit trust fund, and we said unit trust fund is an investment scheme that pull money from various investors and are managed by professional fund managers who invest the pooled money in a portfolio of securities such as stocks, bonds, and other money market instruments or other authorized securities to meet the objective of the fund. And we say there are various types of unit trust. One is the money market fund or MMF. Two is the equity fund, EF. There is the balanced fund and there is the fixed fund. And we said money market fund are funds that invest in short-term debt securities like bank deposits, short-term T-bills, and are low in risk but very high liquid, and are best suited for risk-averse investors who wish to get high interest returns and stability on portfolios. Something you need to know before investing in MMF or money market fund is carefully review the fund's prospectus to understand its investment objective. What do they invest in? Also know about their fees. How much do you need? How much are you charged to invest or to withdraw? What are their risks? What do they invest in? Like we said, the money market funds is not very risky, but then there are some things that are more risk than others. Like with the treasury bills, we know that it is a bit low of risk because the government always pay their debts. Something like the properties, we know that. As in, just know what they will be investing your money on. You do not want to invest in something that risks your money. Also consult with the financial advisor. Let them advise you on what kind of fund best suits you. You do not just want to invest something because Caro said. You do not want to invest something because your friend said it's the best or it does well. You want to invest in something that you know will bring you returns. So always seek a financial advisor before you invest and know which one works best for who. You do not want to invest in something you do not understand just because Caro said, or just because somebody or your friend said such investment is better than such investment. Always seek information. We all know that whenever you invest more, whenever you risk more, your chances of getting more investment is high. Unlike when I just invest 100 bob and you invest 100,000, my chances of getting more is your chance of getting more, you who invested 100,000, is more than I who invested 100 shillings. But then I cannot just risk 100,000 without understanding what I am investing in. So always seek financial advice. Before investing, there are factors to consider, like customer service. How well do they treat their customers? Credibility. Can you withdraw money whenever you are in need, or do you have to wait maybe like a month or so, or like just a period of time to withdraw? How accessible is your money? What is their management fee? What do they invest in? I said before. Note that the interest rates fluctuate depending on the money market. With the money market fund, you earn interest daily but compounded annually. And someone would ask, why should I invest in a money market fund or MMF? One, because MMF is a low risk investment. We all know that no investment is 100% risk free, but then with the MMF it's low risk investment. You do not have to worry all the time. You do not have to have sleepless nights worrying about it. Like we all know that with the treasury bill, chances are the government always pay their debt. Another reason is because you can invest with as low as you got. For example, like the Saiton or the Zimele, you can always invest with as low as 100 bob, meaning that you do not have to wait until you are very rich to start investing. You can start with as little as you got, then build up your portfolio. Another reason is because of high returns. Like, for example, unlike you depositing money in the bank, with the money market fund, it will always give you some money, it will always earn you money. And we know that with the money market fund, it earns interest daily but compounded annually. And you need to note that this is not a get quick rich scheme. It's simply somewhere you keep your money instead of just lying there losing money. It's instead earning you money. And we need to note that the higher the investment, the higher the return. You don't expect to invest 100 bob and get a lot. You don't expect to invest today and make a fortune tomorrow. No, it's a process, a day by day process, and with time you build your portfolio. With time you will have enough to survive. So this is where also budgeting comes in, and you know that I have this money, I need to invest it somewhere and have it remain there for a while, then I will take it out, and after that you know that it's earning you money. So if you budget, you know that on top of that I need to invest in money market and it will go for this long, and I know that this long I will not be struggling to a point of where I'll be forced to withdraw it. In short, what I'm saying is you can start investing with as little as you got, and there are very many types of money market funds or places where you can invest. One of them is Zimele, another one is Saiton, and the two you can start investing with as low as 100 bob. There is Genjis, where you can invest with 500. UAP or Mutual, invest with 1,000, as low as 1,000. Madison, as low, you can start investing with 5,000. There is AP, Apollo, there is Sanlam, there is Nabo Capital, there are so many. You just need to choose which one you want to invest in and which one aligns with your goals. I hope I make sense. If you have a question, comment below. Till next time, bye.